Okay, thank you guys for coming. I so appreciate it. David and I'm sorry, I keep saying Jenna. I'm so happy you came down from Naples. I mean, I didn't expect that anyone was coming from that far away, so I feel super, super honored. Thank you to some of my friends, Maurice and Ileana and Carla, to coming down as well to support me on this cool networking that we're doing. So the reason I wanted to pick this subject is because I think it's super valuable for many small business owners that don't really do it, and they really don't realize how much they need a business valuation. So just to give, this is going to be a very short presentation, just to give it just a general idea why they would need it instead of waiting for it. All right. So here's a cool quote from Ben Franklin: "An investment is knowledge that pays the best interest." So whenever you're investing in knowledge, whether it's education or in this case, a valuation of your business, you're always going to have a better idea of where you stand, and with that, you'll be able to, project where you want to go and be able to use that information for bettering yourself. So this is actually it's the stats from IBIS, I believe, and it says that 2% of business owners are the only ones that know what their business value is, and 98% do not know. So that's a really, really big number, because there's so many small businesses. There's about 97% of small business owners in the US, and then to think that almost 98% of them do not know what their business is really worth. So that's a super big number that I'm hoping that I'm going to be able to change that. So I wanted to talk a little bit about the roadblocks as to why certain business owners don't do this. So one of them is that they feel that doing a business valuation is very expensive, and it's true. In the past, it's always been something that you would have to hire people and and pay a lot of money. It could be anywhere from $10,000 to $30,000 depending on how large the business is. It could truly be very expensive to do a certified business valuation. The second roadblock is that it's time consuming, and it's true. It can take up to 4 weeks, 5 weeks sometimes, with back and forth. So it's not something that they want right now and they can get it right now. They have to really wait for it. It's a complicated process. It takes a time away from the business owner from running their business, because they have to focus on what the evaluator is requiring. That could be from projections, it could be the current financial statements. So if they're not accurate and well, there's going to be a lot of back and forth, and the time is only going to get longer and the cost is going to get bigger. And of course, the last one is that most business owners are thinking, well, why do I need to do it now? Like, I don't need it. I'm not selling my business. I'm not, why should I do it? So to answer that question is like, when is really the right time to know your business value? The answer is anytime. It could be used for growing your business. It could be used to restructure your business. And it could also be for when you're ready to sell or succession planning. So it could be used anytime. And with the next slide I'm going to talk about is like how much easier it is now to actually get a business valuation. So the big picture is that it's really important to understand the big data and how your business is performing with the rest of the businesses in the industry, right? It helps you get protection. Let's say if you want to go get insurance for your business, or if you want to get insurance for the key person in your business that the whole business is relying upon, it's important to get that business valuation. You can use it for planning for your retirement or estate planning. If your main income is from your business, everything is going to be relying on that. So your tax CPA, is going to need that. Your lawyer is going to need that to make sure the estate planning is done properly. Make better decisions guided by facts. So with a business valuation, you will be able to increase and grow your business using strategic tools and key performance indicators that the business valuation will provide you. And of course, the last one is knowing your potential. So if you know where you stand with the industry, then you will know what your potential is. If you're already, let's say, at the industry average or already going beyond, so you know there's a higher potential for your business to do even better. So why not know it now where you stand? So this slide is just basically a business valuation really can put you ahead of everybody else. So since 98% is not doing, if you are doing it, then that means it puts you ahead of everybody else. So you'll have a better step up to planning what's happening next. So a little bit about the technology that I'm using right now is, it gathers data from 25 different areas, and it will provide more of a streamlined valuation that would help out, with your business. It's very sophisticated and accurate, and it's actually approved and endorsed by the ABA. So this is a software, a tool that I'm using right now that bankers use for loans, evaluation. Possibly SBA uses it as well. So it's a tool that I can use to provide for business owners, so that by the time they go to a loan officer or to the SBA to borrow any money, they are in a very good place. Not only do they have their actual financials, but they actually know the value of their business. So the technology goes through a what is called, I'm going to read through because it's technology, so I want to make sure I'm not missing any information. So it does use a 7-step process, and it has a patented algorithm. So it's going to be looking at the industry based on the code that we put in for that business. So it has so much big data that it will pull in together to make sure it gives you the most accurate picture. Okay, so this is the different valuations that we will provide you. The actual report is about, I think, 29 pages. So it'll give you the equity value, the asset sale value, the enterprise value, and the liquidation value. So the difference is that in the equity value, it's focusing on the firm's liquid financial assets, which is like the cash and accounts receivable and deposits, less any liabilities. So that's one valuation. The second valuation, the asset sale value, it's going to focus on the firm's only assets. So the inventory, fixed assets, anything else like that, to show how much it is based on the asset value. The third one is the enterprise value. And this one considers equity plus the liabilities to give it an overall enterprise value for the business. And then the liquidation value would be something like, if something happened today and I had to liquidate my business right now, what would I get? So it kind of gives you a big variety of different ways of evaluation, which is similar to what a certified business evaluator would do, but it's pretty much half the time and half the cost. So this is really great tool. I just love it when I found this software, and I'm so excited to use it for my clients. The next thing that the software will provide, and it's part of the 29-page package, is 13 key areas, which are the specific KPIs that a business would need to know. So it will give you, based on the industry, or compared to the industry, if it's doing less, if it's doing similar to the industry on the average, or if it's doing a lot more. So this is a great tool because it gives you perspective, So it's one thing to say, here's what I think the value is, versus, well, let's put you down with the comparative to what the businesses in your area, in your location are doing. So, so these are some of the key performance indicators that they would cover. Return on equity, which is basically showing the effective use of equity. So if you have shareholders, how that money that they put in, you're actually using them. The interest coverage, this is basically how much of money that's left in your business, let's say, prior to any depreciation or any interest or taxes, and how much money is available to you to cover any interest for loans that you have. So it's a very, very interesting data. Income to revenue, or the other way to show it is like the net profit margin. This is super important. We want to know if you're making, 10 million, but you're left with let's say $250,000, like you may not be doing a very good job. Actually, there's something is off. So this will tell us exactly how we're doing versus the industry as well. Receivables conversion. that's basically showing how quick your receivables are getting paid. So for those type of businesses that actually send a sales invoice or the merchandise goes out and then you're waiting to collect, the faster the collection, the better the receivable numbers. So this is a very key point for those businesses that actually do sales invoices. Inventory turnover, that's for businesses that actually have inventory. We want to make sure that your inventory is rolling continuously instead of just being stuck in one place or it's very slow. That's a very important thing because in some businesses, the inventory, there's certain inventory that's moving, others are not. So if you don't know that number, you're not going to be able to say market the one that's not moving or maybe not purchase that one. So you can't make those decisions if you don't know what that percentage is. So debt to equity, that's basically how much of debt as a percentage to your equity. So obviously you don't want your debt to be so much more than your equity. That means you have a problem in your hands. Fixed asset turnover, similar to the inventory, but it's mostly on the fixed assets. So the actual furniture and fixtures that you have in your business. And then cash to debt, that's basically how much of cash you have right now to cover any debt and loans that you have. So these are really, really important ratios and KPIs. There's only some of them from the 13 that they provide. So as I said, I am using this tool to provide business valuation services to small business owners. And the way I want to also integrate into my model is that I have a framework that I cover, which kind of brings together some of the key things that I've done in my experience. So I was an auditor, I was telling you guys earlier, so I was an auditor and I was a CFO. So what I like to do is help bring small business owners to a point where they have flying colors audit from third-party auditors. They can get a loan anytime. They have procedures in place to take care of not only their business, but mitigate risk. Those procedures are super important. So what I put together is a framework that I'm going to use. Evaluate the business, that will be the first step because the 29-page report is going to tell us where to start. Next thing would be to assess financial accuracy. I can give advice on what to do and how to strategically grow the business if I can't rely on the numbers. So I'm going to use some of my auditor skills to kind of make sure that the information in the business and the records are actually correct. Leveraging cash flow, this is very important. Earlier, as I mentioned, I use sometimes certain software to build in the cash flow management to make sure that the cash is coming in is getting leveraged properly and it's being spent in the right places. Utilizing menu pricing strategies. So for some of the service-based or businesses, menu pricing is a very interesting way to not only grow their revenue, but it's an attractive way to sell. So this is a strategy that I'm implementing as part of the overall framework because I want to make sure that they grow their business and increase their revenues. As I mentioned, establishing policies and procedures. For example, if there's no expenditure policy or a budget, like how are you going to hold an employee accountable or responsible? They have to know how to submit an expense report. And a lot of times I've seen in a very small business, they don't have any policies. So it's very random. We don't know who's supposed to approve it. It gets paid and we don't know why it got paid. So I've gotten into a business where I'm questioning all these payments. I'm like, but why? So what is this for? And what is that for? Is this really legitimate? How do you know it's legitimate? So these are the questions that I would be covering and building a full processes and procedures so that employees know what they're supposed to do and an employer is actually protected. Analyzing financial data. One of the key things I also implement into the system is making sure we're comparing actual data month over month, year over year, to see what that story is. The financial story is super important, and that's something that most small business owners don't pay attention to, and they should. And they should do it at least on a monthly basis. Trim down unnecessary costs. So as part of when I'm looking at the numbers, I will question with the business owner, is this necessary? Can we get another quote? So we want to work through all the different vendors and see where we can get some cost savings. And with a great network that I've built with different partners, that's something that I bring to the small business owner as well. So they don't have to go find the people themselves. I can help them find the people. Increased profit drivers. Part of the strategic planning and growth planning, what I'd like to do is help the business owner think outside the box and see, for example, if we sell this, what about if we sold this and this? What is the next step? So how can we bring up and increase the profit drivers? Operate efficiently and effectively. Part of the overall review of the financials, we're also going to look through how are the internal operations working. Are there any redundancies that we can clean up and fix up and make it more streamlined so there's less cost and less time that is lost? And you all know, like, time is money, it costs a lot, and so the more efficient the business is running, the better. Navigating a structured growth map. So again, as I mentioned, like a part of the strategic plan, I build out 3 to 5 year projection model, and that would be the roadmap for a business owner to kind of compare their actuals to and tweak as we go. Because for a first time when we do the plan, we have to start working on it, tweak it as we go, because it's a first time, you know. So it's important to have good data, but it's also good to continuously tweak what we're doing because plans change. Monitoring success. This is also part of comparing the actuals to the forecast and making sure that everything is making sense. And then lastly, transform personal and business wealth. So with the full framework put together for a business owner, they'll be able to take the right action to increase their growth and live the lifestyle that they want to live. So this is a little bit about the framework that I do. So if you guys have any questions, I'm happy to take them. As I promised, I'm going to keep the learning part short so we can continue talking and networking and building relationships, which is very important. So, any questions? Yes, sir.
What type of businesses do you typically work with? I'm sure you work with everyone.
Yes.
But you specialize or cater to certain services.
Yes. So yes, I'm catering to mostly service-based organizations. I have, when I say service-based, it could be a law firm, it could be a medical practice, it could be any kind of a coach, a business coach, a fitness coach. These are all service-based, and with the current technology, I mean, I have a client that's digital fitness, and he's at 20 million right now. So I mean, so it's a software service-based production going on, and it can be a very large, profitable company. It doesn't mean just because it's a service-based doesn't mean they have a cap these days. Yeah. Awesome. Other questions? All right. Did you guys think it was a good presentation? Yes. Informative. Good. Thank you so much. Thanks for coming. Let's continue having some more drinks and have fun. Thank you.
Thank you.
Thank you.